everyone. It's Kirsten over at the Normalized Money Project, the Normalized Money Show, and Katie's House Foundation. I have Julie on today. Julie, how are you?
Good. Good morning, everyone.
So today we are talking about what is a good credit score. Julie, what are your thoughts on a good credit score?
A good credit score is, I want to say, on the chart that we're looking right in front of us. I think most people should try to fall in the very good, and that obviously I think it's difficult at times to get the exceptional, and I think those are the people that are really focused in on trying to do that specific thing, is to get that number. But for the average person, I think very good will keep your interest rates down. It will keep you from being rejected for the things that you want. And I think that's one of the things that we wanted to talk about today, right? Is the scores that you have really can affect financially how much you pay for things, even though you don't realize it.
Yeah, definitely. So at the bank, when we give out loans, we generally look for people to have a 740 credit score or above. I will tell you that most people do not have a 740 credit score. They will range from 620 being what we would consider not so good, to 680. When you're around the 680 mark for lending purposes, that's where we consider that alt A. So A paper would be 720 and 740. 740 really is A paper and above. Once you get below that, there might be like an interest rate tier for 720 and then 680 and then 640 to 679. And then once you start getting below 640, the bank is wondering, what's going on inside the credit report. And so when we talk about this right now, for everyone who's listening, people might just start wondering, how do you even know what your score is? And we're going to cover that in the next few 5 to 10 minute lessons. Right now, staying on this topic of what is a good credit score, I think people really, if they do pull the 3-digit number from one of the 3 bureaus or even all 3 bureaus, you're going to want to see yourself in the 740, which again is difficult to do. And I guess right now I just would want to say there are 3 tips that I would give to people to make sure that you are over 740. Number 1 would be to have 3 different, we call them trade lines. So that would be, let's just say 3 credit cards, or maybe you have an auto loan, a credit card, and then a mortgage, for example. But you need 3 different trade lines. That's not going to be your utility bills. It's not going to be your rent. It's going to be these other types of things that report. And then of those 3, you really need to keep those at 30% of the maximum allowable. So that would be really, if you have a credit card for $300, you shouldn't go over borrowing $100 unless you're going to pay it back immediately the next month. Otherwise, you're sacrificing your score. And then longevity, just so everyone knows, if you have a trade line for 24 months, that is when it's really helpful for the banks to see that you have been able to manage that, that trade. You're trading money, right, for your credit score, essentially. And so if you have those for open and active, 3 of them for 24 months, you should be able to see yourself at a 740 credit score.
And so most of the people looking at this chart here are going to probably think that 650 is a good score. And I want to say that that's probably because credit cards and all those trade lines that you're talking about, they actually will give you a credit card and they will give you a loan at that number. It's just not a good financial trade, as you called it, right? Because for every dollar that I'm giving up, or they're giving me, I'm paying $1.50 for. But the worse my credit score is, I might be paying $2 for. And so for me to pay my bills on time, because that's going to be a big percentage of their algorithm, right? And for, like you said, the longer that you have an account that you've paid on time is going to give you a better score, and then the amount of money that you're using against what they're allowing you to use is also going to play a big part in that. So if I've gone out and I've maxed my credit card out, what would you suggest I do to try to improve my score then?
Well, really, you need to just pay it back. Even if you should pay more than the minimum, but if you pay the minimum, that's okay. You're trying to drive that balance down to 30% of the maximum. So the other thing that you might want to consider doing is if you have a history with that particular credit card company after 6 months of timely payments or 12 months of timely payments, normally you can go in online and you can actually ask for a credit increase. And so if you don't have the money to pay it down to 30%, the alternative is if you've been paying even the minimum payment for 12 months on time, then you could go in online or you could give them a call and say, hey, can you maybe double my credit limit? And then don't use it, but just by virtue of now having a 50% ratio. So if they increase your availability to $1,000, and before it was $300 and you were maxed out, and now you have $1,000 limit, now you're back to 30%. So that's one thing that you could do after you've established just even making the minimum payment for 12 months, because they'll say, oh, okay, this person has been paying us on time, so we're okay with that. I will tell you, I agree with you. You're not going to start out with a great credit score in most cases. Sometimes, if you have been added to people's credit to be an authorized user, you might. But the point is you have to start. And so go to capitalone.com is my suggestion. They seem to be the most lenient, and apply for a credit card. And even if that is secured against your bank account, that's okay. Don't get something that doesn't report on your credit report. It's really important to make sure that if it's a secured card or an unsecured card or even a car loan, do double check that they are going to report it, so that way you can start establishing that credit.
Okay. Well, I think that that's a great place to start, right? And then as we work into some of the other episodes, we're going to talk about how to know what's on your your credit report, and how to know when you're getting a good score for those things and whether or not you need to dispute that.
Yeah, definitely. So that's all that I have for today. Julie, do you have anything else?
No, I'm pleased to hear that there's a way to get a better score without having to work harder.
Yeah, everyone is tight for cash right now. So if you appreciate the content in our videos, please like and subscribe, and we will talk to you next week.